Crypto Pirates Daily News, July 4, 2021. Latest news headlines. Cryptocurrency, the future's currency. Will the Shiba Inu, SHIB, continue to explode in the coming weeks? The attorneys representing the Africrypt brothers resign from the case. Elon Musk's hold on the crypto world is dwindling after his latest comments failed to boost dogecoin and Bitcoin. What exactly is a blockchain protocol, and why is it important in crypto? Here's what staking could mean for Ethereum. Chivo Wallet, a comprehensive overview of El Salvador's $30 Bitcoin airdrop. Cryptocurrency, the future's currency. Blockchain is the essential underpinning technology of cryptocurrencies. Regardless of the type of document, blockchain has enormous promise in record-keeping. Whether you like it or not, the future is digital. Technological improvements have changed the way people live and have had an impact on practically every aspect of our life. The day is not far off when virtual assets will outperform tangible ones in terms of value. Your gold, property, currency, and other tangible assets may soon be supplanted by digital equivalents. The sooner we recognize it, the more prepared we will be to face future challenges. Electronic cash, cryptocurrencies, is one example of a digital revolution, sometimes also called virtual currency, digital currency, or cryptos. Cryptocurrency is a digital asset that is mostly used to purchase goods and services online. In a nutshell, cryptocurrency is a form of money generated and controlled by the masses. It all began in 2008, when Satoshi Nakamoto published a white paper titled Bitcoin, a peer-to-peer electronic cash system. As a result, Bitcoin was the first cryptocurrency ever created. Since then, over 4,000 cryptocurrencies have been created. This new monetary system has resulted in the development of new universal, decentralized networks that have been utilized to transact by millions of individuals worldwide. Blockchain is predicted to affect a wide range of sectors. It allows for peer-to-peer transactions without the need for a centralized governing body. The lack of centralized authority is the major reason why most financial institutions and governments oppose cryptocurrency adoption. Furthermore, this is the reason why the general public prefers cryptocurrencies to fiat currencies, currencies that the government supports like dollar, rupee, etc. As cryptocurrencies mature, IT leaders' interest in understanding this market has grown. There are two schools of thinking in general. One believes that all virtual currencies are a hoax and will collapse at any time. The second group believes it has a promising future and will eventually replace real money. At this point, it is unclear which group is correct and how these technologies will evolve in the future. There is, however, little debate about the underlying technology, namely blockchain. There is no doubt that cryptocurrencies are on the rise. People are becoming increasingly interested in cryptos as a result of their exponential profits in a short period of time. It is unknown how cryptocurrencies will develop in the future. They may be adopted by current financial institutions, resulting in the issuance of electronic cash or digital cash. On the other hand, many existing entities may become obsolete, and many new entities may be formed to ensure the system's proper operation. Over 7 million people in India have already invested around $1 billion in cryptocurrencies. This figure is steadily rising as the central government reconsiders its previous position of imposing a blanket ban on all cryptocurrencies. The government has announced the creation of a new bill, dubbed the Cryptocurrency and Regulation of Official Digital Currency Bill. This could be India's first move towards legalizing cryptocurrency. The RBI is also developing a digital money. According to RBI Governor Sheikh Tikanta Das, the moment has arrived to leverage its applications while also enhancing the digital infrastructure. So the day will come when we must deal with digital currency on a daily basis. Cryptocurrencies aren't all made of gold. Apart from its promising benefits such as low processing fees, high transaction speeds, increased payment options, easy currency exchange, and decentralized architecture, it also has some concerns that must be addressed before cryptos can be legalized, such as price volatility, anonymity, cybersecurity, environmental impact, and the lack of a refund or cancellation mechanism. Despite all of these risks, Bitcoin has risen 193,639.36% since 2012. According to Binance Research, the user index for 2021 demonstrates a 97% confidence in cryptocurrencies. Whether we like it or not, numbers are ruthless, and we must be proactive if we are to use the digital revolution for social benefit. Will the Shiba Inu, SHIB, continue to explode in the coming weeks? While many individuals remain enthusiastic about Shiba Inu, one has to wonder how long the community will survive. Given that this currency is still down over 77% from its all-time high, a market reversal is quite improbable. For the time being, bearish pressure has eased slightly, but there is still more work to be done. Shiba Inu requires a firm bounce. When new meme currencies are introduced to the market, there is frequently a surge of early interest. Everyone wants to be a part of the next Dogecoin killer, despite the fact that no project has ever lived up to that moniker. For Shiba Inu, it appears unlikely that will happen as well, since the token has enjoyed a strong run that has proven too unstable to sustain for an extended period. SHIB's value has been steadily declining since achieving an all-time high of $0.000379 2 months ago. Today, that same token is worth $0.00000861, representing a 77.3% decrease in value from its all-time high. For some, this may appear to be an attractive price point to amass Shiba Inu, yet no one knows whether this asset has any long-term potential beyond the speculative side. Even though this week's momentum has been positive for SHIB, market volatility remains high. While Bitcoin and Ethereum are increasing in value, other assets may follow suit. However, if the markets become bearish again, it is not improbable that the Shiba Inu's value may plummet significantly. As a result, it remains primarily a speculative asset, and caution is urged. What takes place behind the scenes? The community can anticipate the launch of ShibaSwap. As a next-generation DeFi platform, users will be able to supply liquidity, stake, and trade tokens in order to earn passive income from WOOF returns. Although there is no official debut date for this service yet, many community members anticipate something happening within the next 36 hours. That could just be wishful thinking, but one never knows what the future holds. Additionally, this service may not bring value to SHIB, Leash, or Bone, despite the fact that it may increase liquidity. Increased liquidity may result in bearish pressure, depending on the broader market environment. Certic's formal audit is not available at the moment. Additionally, there is anticipation of SHIB trading on Coinbase Pro. Although it was announced weeks ago, the launch of Shiba Inu on Coinbase Pro has been postponed owing to technical difficulties. SHIB deposits are currently unavailable, and trading of this token has been suspended indefinitely. Coinbase has yet to elaborate on the technological challenges it faces throughout this integration. The attorneys representing the Africrypt brothers resign from the case. Not long ago, the world's largest crypto heist was documented. Africrypt, an exchange based on the African continent, witnessed up to $3.6 billion in cryptocurrency funds vanish without a trace. Africrypt's owners terminate their legal counsel. While the platform first looked to be the victim of a breach, things took an unusual and unpleasant turn when the exchange's brothers, Amir and Raiz Khaji, instructed their clients not to contact police enforcement, since doing so would likely obstruct their own investigation. This raised red flags for some Africrypt investors, and some informed law police about their experiences nevertheless, as something felt suspicious. Since then, it has been stated that the attorneys representing both brothers have been fired and are no longer participating in the case. At the time of press, it is unknown whether the owners of Africrypt had retained legal counsel. In an interview, John Woesthuizen, a South African attorney defending the brothers, explained, "Our assistance to the Khaji brothers has come to an end. I'm looking forwards to reading your follow-up story on the Africrypt saga." Only 2 days before he was fired, Woesthuizen issued a statement declaring that the brothers were not involved in the heist and were absolutely innocent of any crime. He stated as follows: "There is no basis for the charge, and the claims are without merit. They claim it was a hack and that they were defrauded of their funds. In any case, neither brother has been seen or heard from since they first reported last April that Africrypt had been hacked. Amir, who was 2 years older than his brother, initially told exchange clients that notifying law enforcement was worthless since he and his sibling lacked significant life experience." A hacking history? To many, this was an odd excuse, and several customers contacted Hanacom attorneys to assist them in locating the brothers. When they were unable to do so, the legal team contacted Hawks, an African police force devoted only to combating money crimes. Hanacom attorneys stated in a statement, "We immediately suspected something, as the announcement pleaded with investors not to pursue legal action. 7 days prior to the alleged intrusion, Africrypt personnel lost access to the company's back-end platforms." Even more dubious is the fact that prior to Africrypt, the brothers owned a second investment firm that was eventually victimized by a similar so-called attack in 2019. During that time period, the brothers contacted all clients to inform them that the platform had been depleted of all Bitcoin following an alleged cyber attack on Binance, the enterprise's major trading partner at the time, implying that this has become a trend for the Khaji brothers. Elon Musk's hold on the crypto world is dwindling after his latest comments failed to boost Dogecoin and Bitcoin. The Elon Musk effect, which roiled the crypto market this year, when each tweet from the Tesla CEO had the potential to send token prices flying or plummeting, appears to be losing its appeal. After unveiling Tesla's $1.5 billion Bitcoin stake and applauding the meme-inspired asset's potential, the billionaire has been a major driver of Bitcoin and Dogecoin volatility. Recently, his split from Bitcoin pulled it down to levels not seen since the beginning of the year. However, by the second half of 2021, Musk's influence appears to have waned. Musk tweeted on Thursday in support of Dogecoin, writing, "Release the Doge," alongside a Godfather-inspired meme featuring actor Marlon Brando. The price of the coin increased slightly, but not nearly as much as it would have done a few months ago. For example, Dogecoin increased by 20% in May after he conducted a Twitter poll asking if people wanted Tesla to accept the token as payment. Musk followed up on Friday with another tweet featuring an image of a man on his laptop, obviously fixated on Dogecoin and the video game Polytopia on the screen. It appears that investors are no longer listening and are now recognizing that the tweets of one man should not dictate whether they purchase or sell their assets, Alexandra Clark, a sales trader at Global Block, a UK-based digital asset dealer, said on Friday. Numerous investors have poured money into Dogecoin via trading platform Robinhood, which announced on Thursday that the meme token accounted for 34% of their cryptocurrency revenue in the first quarter of this year. The corporation cautioned that if demand for the coin drops and is not replaced by interest in other cryptocurrencies, its business could suffer. As of Friday, Dogecoin's price has fallen almost 65% to about 24 cents from its May high of 68 cents. Musk and his Twitter storms have been chastised by critics for supposedly sending prices on a roller coaster and manipulating the market. With millions of people already investing in cryptocurrencies, having one individual wield this much power might be problematic, since it could encourage investors to make judgments based on scant, if any, research. Since Musk's split from Bitcoin, the world's most popular cryptocurrency has been in a state of dormancy. It remained largely silent when the billionaire proposed a promising outcome of a Bitcoin miners' meeting aimed at making the commodity more environmentally friendly, or when he stated that Tesla would resume taking Bitcoin as payment if miners demonstrated they were utilizing 50% renewable energy. Bitcoin was last trading near $33,000 on Friday, down nearly 50% from its April high. It is still up roughly 15% so far this year. It becomes increasingly difficult for investors to make investments and maintain the ability to react quickly enough to beat the crypto market in the face of a constant flow of information from a single important voice. However, it appears likely that the crypto community has grown tired of Musk's tweets, causing their influence to fade away as a passing trend. What exactly is a blockchain protocol, and why is it important in crypto? Blockchain protocols are essential to the operation of all cryptocurrencies. But what exactly are they, and how do they function? Cryptocurrency is based on the blockchain, and blockchain technology includes many computational rules or procedures, some of which you may have heard as media buzzwords. These guidelines are referred to collectively as protocols. They are, however, more than just computer commands. So what exactly is a blockchain protocol? Protocols are standardized rules that regulate what a system should or should not do in the realm of computer programming. As a result, blockchain protocols are a set of laws or standards that regulate how a blockchain should work in the world of blockchain. A blockchain protocol can specify a wide range of rules, such as the blockchain's interface, the interaction of participating computers, the type of data that should be shared, incentives for network developers, and so on. What is the process of a blockchain protocol? A blockchain protocol can only function if everyone participating in it adheres to it and works on its levels in a systematic manner. The current blockchain protocols are divided into 3 layers. Layer 1, the underlying system of a blockchain protocol, is referred to as this layer. Layer 1 protocols include the well-known proof of work, POW, and proof of stake, POS, systems. Layer 2, this layer extends Layer 1 and focuses on speed and scalability. Bitcoin's Lightning Network, which is meant to process Bitcoin transactions quickly, is an example of a Layer 2 protocol. Layer 3, concerned with the implementation and execution of a blockchain protocol. Layer 3 protocols are used in many decentralized applications. Examples include the decentralized finance, DeFi, platforms Uniswap, PancakeSwap, and NBA Top Shot, as well as the NFT marketplace. Because cryptocurrencies are gaining popularity, many blockchain companies are increasingly relying on existing protocol layers to handle current challenges in their systems. For optimum scalability, several blockchain protocols now offer up to 5 protocol layers. What is the importance of a blockchain protocol in crypto? Blockchain protocols enable Bitcoin transactions. All protocols in the industry strive to accomplish or maintain the 4 primary cryptocurrency principles: decentralization, consistency, security, and scalability. A blockchain protocol also provides structure to a blockchain network. A blockchain network is made up of people and organizations that manage it, and standards are put in place to ensure that every single transaction is confirmed by developers and engineers and so functions smoothly. Simply, cryptocurrencies would not be where they are now if blockchain technologies did not exist. What are the different kinds of blockchain protocols? There are hundreds of blockchain protocols, and each one serves a distinct purpose based on the organization that operates it. In the cryptocurrency sector, the following are the primary types of blockchain protocols. Bitcoin's transaction protocol is a seminal blockchain protocol that changed to digital payments. Peer-to-peer transactions, hashes, digital signatures, and other protocols created the groundwork for cryptocurrency transactions. Ethereum's architecture is based on smart contracts, which allow transactions to be conducted automatically when network-defined criteria are met. Cardano is based on the Ouroboros protocol, which is intended to reduce energy consumption in cryptocurrency transactions. Hyperledger is a distributed ledger technology that promises to empower commercial transactions and other financial services. Many altcoins in the cryptocurrency market are forks of Bitcoin and Ethereum. A cryptocurrency fork is essentially a copy of the protocol of another cryptocurrency. Cryptocurrencies are defined by blockchain protocols. Blockchain protocols are the foundation of cryptocurrencies, and due to the rapid development of blockchain technology as a whole, new protocols are frequently presented to the market. Given that cryptocurrencies are here to stay, it is only a matter of time before blockchain technologies improve and revolutionize the digital currency environment. Here's what staking could mean for Ethereum. Ethereum, the market's most popular altcoin, has received a lot of attention recently. According to one of the project's co-founders, Joseph Lubin, the market is undergoing a paradigm change. Ethereum's impending 2.0 update has also raised network expectations. Furthermore, there is another rising trend in the Ethereum market right now, one that has garnered some support recently. Recently, several market participants have begun staking their crypto holdings in order to earn a percentage rate payout over time. According to a recent JP Morgan analysis, staking produces around $9 billion for the crypto industry each year. The report's authors also suggested that Ethereum's transition to POS will exacerbate the aforementioned trend, with the latter expected to inject up to $40 billion into the market by 2025. The report stated, "Not only does staking reduce the opportunity cost of owning cryptocurrencies versus other asset classes, but cryptocurrencies often pay a considerable nominal and actual yield." According to staking rewards, the staked value of Ethereum 2.0 at the time of press was $12,022,617,141. The same yielded a yearly return of 6.17%. Notably, Staking other cryptos such as Sol, BNB, ADA, and DOT yielded annual dividends ranging from 4% to 12%. According to the aforementioned article, the JP Morgan analysis also suggested that when the volatility of cryptos decreases, the potential to generate a positive actual return would help the industry become even more widespread. At this point, it should be noted that Ethereum's forthcoming network maturity will most likely lower the alt's volatility in the future. The report further stated, yield earned through staking can minimize the opportunity cost of owning cryptocurrencies over other investments in other asset classes like as US dollars, US treasuries, or money market funds in which investments offer some positive nominal yield. However, at the time of press, ETH's metrics did not appear to be in good health. For instance, monthly options volume fell by 66.8% in June. ETH futures volume, on the other side, has virtually halved during the same era, registering a 49.3% fall. In addition, the alt's total adjusted volume was reduced by $386 billion. Staking is currently being welcomed by eager market participants who want to make passive income by owning cryptos. If the current trend continues, investors are likely to add more Ethereum to their holdings following the 2.0 update. At the end of the day, staking has the capacity to revitalize Ethereum and improve the state of its faltering metrics. Chivo Wallet, a comprehensive overview of El Salvador's $30 Bitcoin airdrop. El Salvador President Nayib Bukele announced on June 25 that each adult El Salvadorian would receive $30 Bitcoin in the official Chivo wallet upon successful registration, in an effort to promote Bitcoin usage in the country following the country's legalization of the largest cryptocurrency by market capitalization. Apart from the obvious benefits of holding, converting, and transacting in both Bitcoin and a virtual counterpart of the American dollar, USD, without commissions or costs. Additionally, the Chivo wallet is interoperable with other Bitcoin wallets. Additionally, there is no need and users are free to use alternative wallets if they so wish. However, it does involve the entry of a large amount of personal information in the name of loss and theft prevention. The official Chivo wallet security measures are unknown. In general, the requirement to input personal information irritates Bitcoin users, who value decentralization and anonymity. Mr. Bukele told El Salvadorians, however, that they are not providing information that the government does not already have. Additionally, El Salvadorians will be able to convert funds received in Bitcoin to genuine USDs at physical sites that execute such transactions as well as at ATMs. However, the $30 Bitcoin airdrop cannot be converted to US dollars since the government wishes to promote Bitcoin usage in the country. Once they are transferred to another wallet, the limitation is lifted. Chivo Wallet is scheduled to launch in September 2021, according to the company's official Twitter account. The Sol snag? According to the published explanations, the Chivo wallet does not appear to be a truly decentralized hold-your-own private key wallet, as any on-chain wallet would incur fees and would be unable to convert effortlessly between Bitcoin and USD, as the Bitcoin blockchain lacks such native capabilities. The exact nature of this freshly launched solution remains unknown. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.